Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Mark, happy Friday, and listeners, welcome back to Digital Currents ABCD Weekly Roundup. This will be a special one because we're going to be in for a lot of insights back from travels and getting ready to set some more, and of course, fresh news from the Fed. But I guess kind of beginning with that first piece, Mark, happy Friday and welcome.
No, thanks. Good to be back. You know, I missed last week because I was over in the Middle East and couldn't line up time zones. And had a little withdrawal, so it's been 2 weeks since we recorded. It's funny, that was the exact bottom in Bitcoin, and just to do the Bitcoin reveal. So I do have the Bitcoin orange on today, and I have officially broken out the Bitcoin bull sock game. And, you know, our mercurial or shape-shifting, I guess, Fed chair, I call him a shapeshifter because he shapeshifts between Jerome, the hawk, J-A-Y, the dove, and J, the letter J with the backpack on, the pusher, handing out stimmy checks. And it's kind of like water, right? I mean, he's either frozen, like ice and restricting liquidity. He's liquid, where he is today with that big rate cut surprise, but he's bordering on steam, right? Where you're just, pumping to the moon. And Bitcoin reacted. We went from 53K 2 weeks ago to 63K today. And, that was pretty quick. So much going on. But yeah, let's definitely talk about the Middle East.
Yep.
You have been, this was my first time. There were two places in the world that I've traveled a lot. That was my job for a long time. I've traveled most places, not every place, but most places. Although I joke, most of those visits were like, oh, is that I'm leaning out of the cab trying to see the site as I'm driving by to the next, conference room indoors. So we're in a lot of pleasure, but I have done some nice leisure trips too, but
also started the around the world with Mark.
Yeah. I hadn't been to the Middle East, and I still have not been to Australia, New Zealand. Mm-hmm. And it's funny, right? Once you do something, all the, fear and trepidation, I shouldn't say fear. I mean, I wasn't afraid of the region, but I was trepidatious. I thought, it's going to be hard. It's going to be different culture. It's going to be, logistically tough. I had this vision, which is not silly because I just looked at a map, that there was this big space in between Dubai, Abu Dhabi, and Qatar, or Qatar, as they pronounce it. Long story short, it's a pretty small space, and I just didn't think about this either, is yes, the region, particularly Saudi, which is big, that is big, that's a big land, is mostly desert, but Qatar, Dubai, and Abu Dhabi are right on the water. And I landed in Qatar on the first day, and it was 5:30 in the evening, and it was 104 degrees. And I sent the picture out, and people said, "Oh, it's like Phoenix." I said, "Well, yeah, if you took Phoenix and lifted it up and put it in the middle of the Gulf of Mexico, so there's 100% humidity. Phoenix is that dry heat, right? The head in the oven. This was like Houston level, hot. I mean, it was hot. That was the other observation of Qatar, is there were no one on the streets. Mm-hmm. I mean, it's a beautiful city, all fully redone for the World Cup 2 years ago. Football stadiums everywhere and brand new buildings. Amazing airport. I mean, the airport got a train running down the middle of it. Unbelievable. Very cool. And then coming into downtown, it looks like a mini Hong Kong minus the hills, right? no hills, but right on the water. All the buildings kind of have that same sheen glass look.
Yeah.
But as we're pulling in to the hotel, I'm like, well, there's no people. And it's not a giant country, but the people just stay inside because it's super hot.
Right.
But had great meetings. Actually met my first sheikh and his son. And what a joy that meeting was, in the sense of they were so, and not that I didn't think that they would be, but I didn't know that we would actually meet one of the royal family. But more importantly, it was how progressive they were, both in building their business empire as well as their investment portfolio and adopting the endowment model. And so we bonded instantly over that as an ex-endowment guy. And just had really, really great meetings.
Yeah. And I think some of your observations, Mark, mirror my own, is that the first thing that gets you is the climate, because it is vastly different from what we see it in the States. We have basically every climate. So that's saying something for us. And then, of course, it's just the development in terms of what you're just seeing there. Everything is new, right? So you're seeing all these buildings put up and just cranes everywhere. And I think that also underscores, Mark, some of the things that you've spoken about on the podcast, which is concentration will make you rich. So it's very clear what a lot of the fortunes are built on. But what's less clear is, now that that's already been done, what happens next in chapter 2? Because some of these cities were built in the 60s. We're pushing now going to 2030, and those economies are rearing. And it's not just because of oil. Obviously, that kind of keeps the lights on, but the diversification is real. They're looking at things like venture capital, and these are some of the smartest investors in the world. They hand select these managers from Cambridge, from Harvard, from wherever fund, and basically relocate them and their families. Probably a price, Mark, that you and I would be a little bit steep to pay, although everybody has a price. But I'll say that it is.
I'll tell you what, I'm buyable. I am definitely buyable. My wife, on the other hand, less so. I mean, I've floated the idea. I have a buddy. I shouldn't call a colleague. So I mean, we're colleagues, but he worked at University of Toronto. He picked up the family and moved originally to Qatar and now to Abu Dhabi, and he runs half of the Abu Dhabi Investment Corporation money on the public side. And then a guy used to work for Morgan Creek actually picked up and moved his family. He's a lawyer to the region, and I floated it kind of because they offer some pretty decent incentives. Like if you set up an office, they will give you capital to manage, and so it's a pretty good deal. And Mimi was like, no. That's Stacy, my wife Stacy, but Mimi is her grandma name. And she's like, the grandkids are here. No, we're not going to. I don't care how much money they give us. So, but I'm buyable. So if anyone, if they're watching, no, just kidding.
Yeah, and I think it's one of those interesting things where we see in the region, just some amazing stats and figures about where those economies are headed, and we're thinking about things like the largest data center that's going to be built in the world. We're seeing, some of the largest deployments into single entities of venture capital in the world. And of course, that talent migration is real. And I think that's sort of what we learned in Econ 101, right, is that labor follows capital. So first you have the capital. And I think probably one of the knocks on the region has been, let's say, finding the local talent, like engineering talent that can kind of build some of these businesses.
Yeah.
But that is, not the problem for long. As you mentioned, there are a lot of incentives to sort of bring companies out there. We're seeing our own portfolio companies shifting their offices and their operations into the region in an attempt to really kind of, push forward with this new trend, both on the capital side, but also on the ease of doing business and sort of the tech growth and focus that we're seeing some of these countries really issue. And I think it was really...
Now that's a really important point, actually, that the countries, Qatar, Abu Dhabi, Dubai, Emirates, right? They're part of UAE, have kind of in response to their big cousin over on the side, Saudi. So as you mentioned, Saudi, made the largest allocation to a venture fund ever, $40 billion.
Yeah, with a B.
Crazy number. B, $40 billion to do futurizing the economy. They have one of our portfolio companies, they're working with Grok to buy inference as a service to create the largest AI inference center in the world.
Right.
So they want to be bigger, and they get it. Look, the gasoline engine is not going away anytime soon.
Yeah.
It's not. And oil and gas, right, despite all of the stuff about, we're going to diversify away. I love, 100 years ago, they published an article saying, the end of coal. We use more coal today than ever in the history of mankind. So
not China grew its economy, Mark. I mean, that's right out of our playbook, right?
Yeah. And but eventually coal will go away, maybe if we bring nuclear back or whatever. But oil and gas are going to be good for a long time, but they're not going to be good forever. And diversifying is how you stay rich. So these people are already rich. Now they want to stay rich. But these Emirates have taken a page out of the playbook of saying, all right, well, let's set up institutes, right, or groups or public funds to focus on innovation. So we met with one in Abu Dhabi that they invest in robotics and alternative energy and not so much AI and data. That's another. So they have multiple groups. One that does all data, one that does kind of all AI and compute. But this guy was more on the hard tech sciences. Had some really interesting conversations about actually a little robotics company we have here in Chapel Hill. They make a fry bot, literally a robot arm that makes French fries. And they're like, yeah, we have a lot of fast food. In fact, they have so many fast food restaurants in the region. It's crazy. So we're driving down this beautiful highway. I mean, this a gorgeous highway between Abu Dhabi and Dubai.
In the middle of the desert, Mark. I want to point that out. It's in the middle of the desert, and all the water comes from desalination, which is a very energy-rich process. And that just shows you that it's beautified, just so that, people recognize this is a special place. And that was fascinating to me. But go on.
And that desalination plant, I'm not exaggerating, right? I'm prone to hyperbole, but not 2 miles. I mean, It was 2 miles long. I mean, it was gigantic. And they are purifying a lot of water. But so it's had this beautiful road with oases, and we pull off into the gas station to pick up lunch on the go. And it was Popeyes. I'm like, what? So they need fry bots. But and if you think about deep tech and robotics and all the things that are happening. Yeah, and he was really into humanoid robotics. That was his personal fascination, and they really, I'm still a little skeptical about that. I mean, if you think about envisioning a robot, is human the right
form,
perfect form, right?
Yeah.
And it's kind of like making old stuff the same in the new tech. Okay, that's fine. I mean, computers let us read faster or write faster or calculate faster, but maybe we should reimagine. And like I do like the Iron Man suit thing, like where you could, and I've seen really good applications of robotic suits to help people lift stuff in where they were hurting their back, and now they don't hurt their back anymore because you got hydraulics. So that all makes sense. But does it necessarily have to be a human, or would some other form factor be better? I don't know. I don't know the answer to that.
Just as long as it's not one of those creepy dogs that we've seen in all the apocalypse.
Holy moly, X.
Leave those out of there.
Yeah. I have nightmares about those. Those are scary stuff. Those are Black Mirror stuff.
Yeah, absolutely. So I guess kind of jumping into the ABCDs, Mark, you mentioned on the Bitcoin side, we've kind of had that push past 63K after the rate cut decision. That 50 basis points was probably more than what I was expecting. Maybe it was more than you were expecting as well.
It's panic. It's pure panic. And look, when somebody does something that you don't expect, you should ask why, right? You should really ask why. Now, right now, everybody's just like, hey, yeah, the party's back and M2's growing again. And, global M2 just hit an all-time record. We have been in this terrible trend for 111 years, since 1913, of basically destroying the value of currencies around the world by every country trying to print more so they can have a competitive advantage over the other countries. Now, what do I mean by that? Look, Adam Smith, almost 500 years ago, was right? Comparative advantage makes sense. If I'm good at growing corn and you're good at growing, apples, then we should trade and have comparative advantage. You shouldn't try to grow corn. I shouldn't try to grow apples. Maybe our soils are different, or maybe our water supplies are different. But that'll make sense. But once you start doing that and you have a globalized world based on trade, well, then people start thinking, well, if my stuff was cheaper, then I could sell more. And so they engineer a weaker currency. Because one of the things I love about the euro, everyone's like, oh, the euro, that was to get the strong Europe and get everybody together. I'm like, are you joking? That was for Germany to get the crappiest, and I apologize to all of those other countries, the crappiest currencies, the highest deficits, the worst fiscal, just the most horrific currencies into the euro to plunge the value relative to the Deutschmark so they could sell cheap machine tools and cars to China. That was a great business. And it worked for a long time. Now, it's not working right now, but that is where we are. So people are cheering 50 basis points. I'm like, whoa, time out. Why did you do 50 basis points? I thought we had record growth, right? Over 3% real GDP. I thought we had record unemployment, sub 4 or 4.3%. I thought we had beaten inflation, right? We got political candidates claiming that prices are falling. Like, are you joking? Can you not do math, right? If the inflation rate goes from 7 to 3, prices didn't fall 4%. They just increased less fast. So, and now we got both candidates talking about tariffs and trade barriers and price fixing, and I'm going to cap grocery stores. Grocery stores? 1% margin businesses? That's what you think is causing inflation? Are you joking me? And remember, we don't have any inflation right now. Inflation is demand pull, right? Excess demand for limited supply of goods. We don't have that problem. We have plenty of goods. We have goods everywhere. The problem is our money is devaluing because we have too much money. And that's good for Bitcoin and good for other stores of value like gold making all-time highs. So I love that everybody's psyched. And I love that stocks making new all-time highs. And I meant to tweet out, but I didn't tweet out. There's a great chart this morning of the top 15 growth companies, right? These software and services companies, and their price to sales ratios and price to free cash flow ratio. And there are a couple of them, Palantir and ServiceNow and Datadog, one of my favorite names, DDog. Some of them were selling it 300 times.
Yeah. This speaks to the point, Mark. I always say that it's going to be driving the M&A story in 2025 because those numbers are going to have to be justified. And it was the first cut in 4 years. And I think, it was kind of double was anticipated and the Fed noted. And I think this is just more of a prophecy of if you think that the economy is good, then you will change your behavior and it will make the economy better. And that's true. And the idea that, the inflation rate can comfortably go towards 2%, that is the goal of some of these bodies. I think that is probably an unreasonable goal, but if you state it, it's kind of like in JFK, it's like we choose to go to the moon, not because it's easy, but because it's hard. I love audacious things like that, but maybe it's too.
Yeah.
But
we choose to make things up because Because if we say it loudly, then people will believe it. And, look, I on what planet, to go with the moon, theme, does it make sense to steal half of people's purchasing power over a 30-year period, right? There is no planet that would make sense. Well, that's not what they do. That's not what inflation is. Well, no, a 2% inflation rate basically takes half your purchasing power over a 30-year period. That's not a good plan. Now, it's not a good plan for the masses because inflation is a stealth wealth tax on the masses. It is a very good plan for the people at the tippy top, right, in the all-seeing eye. If you're at the tippy top of the food chain and you own a bunch of stocks and you own real estate and then you lever them up, then you want to devalue the currency and increase the price, it's not the value, the price of things. And look, if you can do the old, well, I'll sell to you and then get real things that you can, spend and have long-term generational wealth with, bully for you. And so it's a story as old as time, but it's not a good story for the masses. So what you have to do is you have to make people believe that you have a noble cause, right? And, moonshots and all that stuff, noble cause. Inflation, not a noble cause. Right? It's just not. And no matter how many times they tell me it's good for me, it's not.
Yeah. So one thing that hasn't risen, and maybe we can spend a quick cycle talking about, is Ethereum. So in this week, we found that it was sort of the largest gap, a 41-month low against BTC. And it's basically seen 4 consecutive months of falling prices against the dollar. So it went all the way from $3,900 in late May down to $2,300. And so our friends at Bitwise, they say that this could represent a good contrarian bet. But I guess first, in order to bet and risk all your money, you got to understand maybe what's really at stake here. Some ideas could just be that this is really the growth of the layer 2 ecosystem within Ethereum, right? So Ethereum itself, is this, if we think about it as this computing layer, if this is DOS, right? To kind of go through the Windows analogy, then you're going to have all of these different layers on top. And those layer 2s have actually grown a lot. And you've seen some of the largest growth in that area, but it has sort of caused ETH to drop quite a bit, right? And at the same time, some of the old Bitcoin miners, they're not faring so well as well, Mark. After the halving, we've been seeing a lot of companies in the mining space struggle, right? Marathon Digital down nearly 30% this year, Riot 53%, all while Bitcoin is up 44%. So there's kind of this misalignment. And then it also creates some opportunity as some of these companies look to rebrand and catch the 50-year overnight success story, which is AI. As now they're saying, hey, we're not just one-trick ponies of blockchain and Bitcoin. No, we're going to go into AI, Mark. So
we're a data center business. I'm like, well, but we have data center businesses. Why do you want to be that? Why do you want to be old? Well, no, we want to be the new data center around.
Right.
New thing, AI, not, again, to your point, not new. A little shout out to Ben Cohen, runs a very cool online show into the cryptoverse. He's right here in Chapel Hill, super famous online amongst the degens in particular. I'm kind of old in his demographic, but Ben has been on this Bitcoin dominance relative to ETH for a while, and everybody's been giving him massive garbage. He's like, yeah, but until this changes, I'm not going to change my mind. So this is a bad trend, and it's interesting because to your point, you got to ask yourself why. And it's kind of like, why did he cut 50 basis points instead of 25? Well, 2 reasons. Either it's an election year and he's just trying to get, the incumbents. And, it's like, I love the fact that, I don't know if he said it yesterday or today, what doesn't matter. But Biden said, I have never met with the chairman of the Fed. Like, dude, there's video of you meeting. I mean, and people say, oh, he just forgot. I'm like, well, maybe, fine. But
Got to be careful about the declaratives.
Well, in a world full of video where everything is videoed, right? I hate that function on Zoom. Where everything is videoed, you don't say things where there's probably evidence of the contrary. Yeah. But the issue there is the Fed is supposed to be independent. So I think Ethereum struggles from a couple issues. One is it has this massive development base, which is a good thing, and it was first. But then other things came along, other L1s to compete with it, that did some things better, right? They were smarter smart contracts, or they were faster, or they were cheaper. And someone asked this question, and I'm not like a Solana groupie. But with that said, someone has asked a great question. If Ethereum didn't exist and it was invented today with Solana already existing, would anybody use it? It's an interesting question, right? I mean, if they have the same functionality, but one is faster and cheaper, would that development activity have all shifted to Solana? And you and I share maybe, I don't know if it's passion, but we have an affection for gaming. Mm-hmm. And, I thought it was kind of cool, although I haven't picked one up yet, but Solana just, I don't know if it's Solana, but it's built on Solana. There's a new gaming system. It's kind of like in between a Switch and a Game Boy for Solana Web3 games. And I think that's what it's going to take. I think it's going to take, form factors and channeling, because at the end of the day, it's the game, guys.
Absolutely.
Game is what matters. And, we talked about this, one of our portfolio companies, they had a very cool card game.
Oh, yeah.
Online, similar to Magic the Gathering. But when you say similar to the King, you better be as good. Well, I don't know if you can be better than the King, but if you claim that you're similar to something, then you better be pretty darn close. Because if I like playing Magic the Gathering, then if this isn't the same, probably not going there. And so it was not close enough. So it kind of petered away. And I think that's one of the challenges of these competing L1s is, if you're just doing the old stuff in a new way, it's fine, but we really need to innovate beyond that. And that's where I think Ethereum is stuck right now.
Yes. I think that's a good point, Mark, because I think even if, to pull on your thread about gaming, a lot of the great games sometimes are what are called like patches of the original underlying game, which then kind of bear, I guess for the average user, little resemblance to the underlying game. Counter-Strike, which is one of the biggest, most popular games in PC, was built off of Half-Life, which is a popular game in its own right, but basically unrecognizable to folks. I even didn't know that I played both of those games. Yeah. And so as we look to see, how these platforms are going to get expanded and built, I think there's a big winner here. And they just announced some news about their intentions about what the market will be. And I think that big winner could be Block Demon. So Block Demon is our portfolio company. They're the leader in staking as a service. And basically, what they're playing in is, if I'm an institution, I need to have not just technology, but technology services to be able to enter into this economy, because I don't know which is going to be the leading platform, nor do I know what engineering talent it's going to take to build this up and put proper, guardrails in place to be able to participate in this economy. So their CEO, Constantine, declared that they're eyeing an IPO in 2026. I think 2026 is going to be a good year, because whatever administration comes in, you're going to get a feel for where they are in their policy, and also where the economy is after that first year. First year is always a little rocky in terms of, what is going to lie ahead, unless you're talking about maybe, an incumbent president where you have a sense of what has already happened. Yep. So I think that this is going to be, again, a winner in this space. You're going to look for companies that can make it easier to onboard, that next billion users we always talk about, getting them onto Web3. And the successful companies like Blockdaemon and like Figure, who is eyeing their IPO for next year in 25, they're a little bit ahead. They're all about this idea of invisibility, or Harry Potter uses that cloak of invisibility. So you don't even know that it's on, right? And this idea is that let's not even talk about blockchain. Let's just talk about what is the end goal. So if you're a Blockdaemon, I need to participate in Web3, right? So I don't even necessarily need to know how hosting a node works or what is my cost for XYZ. I mean, I should be aware of it, but I don't need to design this from scratch. Just as Figure doesn't require you to know how a loan on chain is originated, they very much lead with, well, what is the problem that you're looking to solve? And that is reducing fees and increasing speed.
No, look, it's a great point. And it's true of every technological innovation is, if you go all the way back to, the first gigantic computers, right? Big as a building and giant vacuum tubes. You didn't really need to know how the vacuum tube really worked. I mean, it's kind of an amazing thing if you think about it. And you didn't really even want to know all the details of, you just wanted it to do the calculations for you faster. And same thing with the internet. Is in the original, ISPs, internet service providers, was literally tech geeks in their garage, bought a bunch of servers, cobbled them together, and then advertised literally in the newspaper that you could get to the internet if you paid them a monthly fee.
Yep.
And some were just horrible. And then you kind of had a roll-up effect, and then you had this AOL thing, and they sent you the disc in the mail, but those were horrible experiences. I mean, I remember having to undo the back of my computer and plug in a new card, and I didn't seed it right, and it didn't work. And it was horrible. So I want to be invisible. I want to open my laptop and have it instantly connect. And even now, right, with passwords and Wi-Fi, and it's still not perfect, but it's, I don't know how it works. I have no idea how I can talk into this little metal and glass box and people can hear me in real time halfway around the world. It makes no sense to me, but I don't need to know. So we don't talk about the internet anymore. Although remember that one of the very first IPOs was Internet Capital Group.
Right.
Internet Capital Group was this company that was going to buy up all these internet companies and pull them together and create this. And it was actually a couple UNC guys. And so I was working at UNC at the time, so I went to meet him, and I told the story that they gave me a shirt, right? I got this nice denim shirt with the Internet Capital Group. And I said, my shirt's worth more than the whole company now. Literally went to zero. At one point, it was multiple billion-dollar valuation, and it went to zero because there was really no there, because it wasn't about the internet. It was about the applications that you can do on the internet. Can I buy a plane ticket? Can I order something online? Can I store my data efficiently? Can I put information into the world? I said, I'm still learning to play guitar, and I'm almost ready. Not that anybody really wants to hear this, but I was almost ready to play the one song that I can because it actually fits with our theme of, digital currents. It's what's going on, right? So, what's going on? And I'm not going to play it, but
listeners, stay tuned because next week might be the week.
That's right. I'm almost there. I am almost there. It's funny. The cacophony of the first couple months was just horrible. And then it was like, okay, that's almost music. Now it's getting close to music. So it's kind of cool. But I lost my train of thought. Anyway, I don't know what's going on. So right. What's going on in this whole ecosystem is more about how we bring solutions to the world using these tools, the A, the B, the C, and the D, right? data is what we're all, creating and monetizing. And then, we need these computer chips to analyze it, and we need blockchains to store it, and we need AIs to help us make decisions with it. But at the end of the day, when I tap my phone to pay, right now it's using a credit card number running on a mainframe computer in COBOL. And that seems like not very much innovation, right? There's not a lot of tech in fintech. But in a perfect world, I'll tap my phone and my wallet, which will have digital assets, which can trade 24/7, will settle up immediately. And that car that I was in on the highway in Abu Dhabi won't use a credit card number to pay that toll, on the toll thing above it. It'll actually make a crypto payment instantaneously. And, I would say my favorite feature will be there'll be a fast lane. And if you pay a little extra, you can go in the fast lane. That'd be awesome. So I think we're getting there, but I love your point about it has to be invisible. And we don't talk about blockchains. We don't talk about AIs. We just talk about functionality and better services and better delivery of things that we all need.
Yeah, absolutely. And I think we'll probably look to close out into AI. And so I think that when we kind of look at the state of this, we've seen a lot of rises and falls and pullback into the space. It's driven a lot of alpha. I like to read a lot of briefings from Goldman Sachs and then bring it all to you, our listeners. I think they do a wonderful job. And they've recently forecasted that the global cloud market is expected to soar to $2 trillion by 2030, but they also caution patience in this, which I think is very easy to kind of call the death of an industry, because figuring out the birth of an industry is hard, because then you're predicting that this industry is going to stay here. But if you say that something is dead, well, that's, probably something that can get a little bit of clicks, because any sort of dip could mean the end of something. So I like that they caution sort of this patience. And we'll have a two for this week for the chart of the week, Mark. So we'll have one on AI, and then we have to have one on what's going on with all of the rate cuts and kind of.
So you did it. What's going on? There it is. There it is. What's going on? It'll be our new theme song.
For non-blondes. So I will quickly share my screen and let me know if this pops up. So this chart should not be too surprising, Mark, but we will cover it nonetheless. And let me know when this pops up. I will share. And like magic, here we are.
Yeah.
So this is straight from our friends at Goldman. AI adoption amongst U.S. small businesses. In a survey of 10,000 small businesses, you've got basically 50% of these businesses adopting AI. Now, what I don't see in this survey, which I would love to see, is what do they consider AI? Does that mean they have ChatGPT integration? Does that mean that they have, basically a Dart type of integration into Google? But there is a gap here amongst these two between the rural businesses and the non-rural businesses, just like what we see in employment numbers, where you have the rural and non-rural jobs, because it kind of affects numbers drastically. But at just under 50%, you've got the rural businesses, and the non-rural businesses are markedly larger. Mark, what's your reaction when you start seeing some of these kinds of broader?
I don't know. This is a tough one for me, because there's the old adage, figures lie and liars figure, and if you torture the data long enough, it will confess, right? So you can basically say anything you want. One of the challenges I have here is certain rural businesses. Right. Let's take farming, right? Yeah. Farming has massively adopted technology. Tractors that now drive themselves using GPS. Probably using some sort of AI agentic device to go through the right rows and to develop or to deposit the right amount of fertilizer. So there's certain businesses where I think that number is probably goes to 100. There are other businesses where there's just no technology at all, so they're not gonna, at a lemonade stand, gonna adopt AI, because you got a person pour lemonade. and that's a extreme example, but now maybe she could use the AI to project how many cars are going to come down her street and when to be out at the right time, and that actually could work. But I struggle a little bit with these types of definitions, but at the end of the day, the adoption rate will vary for lots of different reasons. And I'll give you one example. So financial services, right? Financial services, no way, no how, go into the cloud right now. Well, why? Well, because the cloud isn't secure. Well, what do I mean by that, Mark? Of course it's secure. I put my stuff out there. They don't lose it. Well, no, they don't lose it. But guess what? It's getting hacked all the time, right? How every day you hear an announcement of some company that got hacked and your personal data was leaked, right? So financial services, government agencies aren't in the cloud. They're just never going to be in the cloud unless, and we have portfolio companies working on this, unless you could create a chip that allows the data to remain encrypted while it's in the cloud. And this is what gets me pretty excited about what we're up to. I think about that 2 trillion number. That's just traditional cloud servers, blade servers, CPUs, now GPUs, and these AI chips, and it's all great for NVIDIA. Okay, but all of that is vulnerable. All of that 2 trillion, every dollar of it, is vulnerable to the fact that if, and that's a capital I, capital F, if a new chip, which will come, it's not a question of if it will come, but it will come. But when it comes, it will replace that other type of chip. Because if the choice is unsecured cloud versus secured cloud, no one's going to choose unsecured. Oh, well, what if it's more expensive? It doesn't really matter. How much expense is there if you have to, make reparations for all the, I can't tell you how many free 1-year subscriptions to the credit monitoring service I've gotten because of all the hacks. Not that I ever use them, but anyway, that's a long-winded way of saying I think adoption is going to be differentiated. I think we are not at the beginning. Maybe we're at the end of the beginning, but we're not at the beginning of the end either. So, the adoption of these technologies is going to continue to go. And the innovation on top of these technologies, and this is the part that Abu Dhabi, back to the Middle East, is such an exciting example of, is they're leapfrogging all of the other places they're having to build on top of installed copper and installed fiber. And they are thinking about wireless and satellite. If you think about why would you ever wire up a building today? Okay, well, maybe there's security breaches and you want to be hardwired. Okay, well, what about encrypted technology coming down from satellites? Or what if the satellites get, bumped out of orbit? So lots of things to think about, but at the end of the day, it's that building on incremental and better technology, standing on the shoulders of giants, that I think makes, what we're doing and the ABCDs, which are the building blocks. And maybe it's coincidental that it's like ATCG, right? There's 4 basic building blocks of all human life, right? Which is kind of amazing. All life, not human life, all life. Everything that is live is made up of these 4 things, which is pretty crazy. But A, T, C, and G, they make up the DNA. You can arrange those in not infinite, but close to infinite ways. Same thing with A, B, C, D. It's the intersections of those that create and unlock even more potential.
This is tangentially related. We covered this a lot in the beginning, but we would be remiss without at least giving us a high school civics and economics lesson, because I think we were misled back then. So I will show another screen here. Let me know if this one comes up. This is our old friend, Mark, our old friend and me, the Phillips curve.
Yes.
They showed us that relationship between, or the perceived relationship between unemployment and inflation. And this is so old that this is not just pre-war. This is pre-war, and this is dating back to pre-Civil War and capping to the Great War, World War I. And a lot of our economic decisions are based on this sort of logarithmic curve, where basically higher wages kind of changes the scale when it looks at unemployment numbers. But now this actually came out in Forbes. And why was it in Forbes recently? Because there have been rate cuts. So it always allows us to revisit if his idea still holds true in this ever complex global economy where things are just much more interrelated. And obviously this does not account for technology growth, which
I know I love, and it's not a coincidence, right? That the period of this is 1861, 1913. And it draws, a very good, that is a good statistical fit, right? I'm not a statistician, but I can do a best fit line and look at a regression. So that is a very good fit. And so there is a exponential parabolic relationship between the rate of change of money and wages, or how fast the economy is growing in essence, and employment or unemployment, inverse relationship. Okay, that's fine. And says, the Fed cutting rates at this level of unemployment doesn't make any sense, right? Okay, well, when did this data end?
Yeah.
1913. Something funny happened in 1913. Oh, yeah. The Fed was created. So from 1861, actually from 1776, all the way back to the beginning of the Republic until 1913, there was no such thing as inflation. There was no devaluation of currency. A dollar was a dollar. We didn't print any more of it. There was no central banking system. Okay. So now, starting in 1913, we have a central bank. So shouldn't be shocking to anyone that the relationship that existed in the absence of a central bank would break down in the presence of a central bank, and particularly in the presence of a central bank gone rogue. So if you did this same analysis from 1913 to 1971, it would look less well fit. Mm-hmm. If you did it from 71 to today, you'd say there's no relationship. And it would be like the myth of meat and saturated fat, right? So the president had the heart attack, and everybody freaked out. And the margarine industry, funded a study to prove that saturated fat caused heart attacks, so you should eat margarine. But the problem is the data didn't support that. So what did they do? They just took all the data that didn't support their findings and threw it away. So of the 24 countries, they threw out like 13 of them and had this perfect fit. Said, see, we told you. So for 60 years, people said, oh, saturated fat is bad and margarine's good. Well, now they're like, well, wait a minute. They made that up. They lied about the data. Maybe we should consider the source, which was bad. And so now we realize that it's not your cholesterol number, and statins are poison, and all the stuff that we've been told is good for us, like inflation, doesn't make any sense. So I love this chart because it embodies everything that has unfortunately been wrong for the last 111 years, which is this systematic robbing of the masses and siphoning it off to the few. And look, in 1913, we had the best income and wealth inequality, meaning lowest, in history. Today, we have the highest. It's not a coincidence.
Yeah, and I think it's so many great points in there, Mark. And I think what this chart really underscores is that if you have limited data, you're going to come to limited conclusions, which is why some of the AI models are also wrong for that very purpose. And is this chart factor in the rampant counterfeiting that occurred between state notes, or the FX rates, if you happen to go to Virginia and go up to New York, or does this factor in land purchases and expansion of the United States, which happened rampantly also at this time, and then post 1913, where you get largest purchase like Alaska, which became, a massive haven for natural resources. So I think that much of the same way that it does not, technology also is not forecasted accurately, because, the potential for human growth and expansion is something that you can't measure. And I think it's not necessarily thinking about it being at odds between human productivity, but this idea that it'll be an entirely new category. So I agree with our friends over at Goldman Sachs that it takes some time to come to these analyses about, the impact of AI and growth. And I will remind all of our listeners, as always, check us out on YouTube so you can see fun things like Chart of the Week, Mark's sock reveal, and if we match today, we're kind of in the blue. So
kind of, man, we got the blue, we got the bluish. Yesterday, we were on a call last night, and we both had the royal blue. I mean, it was like the perfect match. So we went a little different on the blue scale, but still blue.
Yeah, we're getting closer here as we close out the year. And we'll remind our listeners, as always, to rate, review, and subscribe, and to stay current.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.